YouTube channel at Signal, and I'll just quickly give me some few seconds before we start up this session. Okay, few seconds. All right, so today we'll quickly be discussing about risk management in trading. So risk management in trading, and one of the things that really used to make traders to lose money is for the fact that they don't know how to manage their risk. And today I'll quickly sort out that issues for you guys, okay? So that anytime you are in a trade, you'll be able to manage your risk. You'll be able to know how to effectively maximize profits in the market. All right, don't forget to just comment. For those that are online, just put in the comments box, I'm live. All right, just put in the comment box, I'm live. And don't forget to like the video. Don't forget to subscribe to my channel. And don't forget to share this video for every trader that is looking out to be profitable in this market. Okay, now very shortly I'll quickly explain some few things about risk management. Now, in terms of risk management is a way to effectively manage your risk, especially for those that are doing Forex trading, commodities trading, stocks trading, or indices trading. So any form of trading you are doing, you can effectively manage your risk. Now, how can you get to manage your risk? Very simple. The first thing you actually need to check is, so I'll be giving us the hierarchy of managing your risk, which is for the fact that, okay, I want to trade. I have so amount in my account. What lot size should I be using? What kind of instrument should I be trading? So now we'll quickly be answering all these questions one after the other. All right? So the first thing first in trading majorly is for the fact that now you need to check your volume. So in terms of volume, I'm talking about your trading capital. You need to be able to check, okay, how much do I have in my trading capital that I can use to trade? And in terms of trading capital, everybody's fingers are not equal, right? Look at my fingers, all right? They are not equal. You see, the tallest one is this guy, right? So we have the retail traders, you have the investment banks, you have the central banks of economies that are also trading. So the volume at which everybody is using to trade is different. So for example, now let's take two scenarios. Two scenarios like what? Okay, let's say we have client A and client B. Now, if client A has 1 million naira in his trading account and client B has 10 million naira in his trading account, can you see that there are two different volumes? So how are you going to fix that? Okay, two different volumes. That means there is no way they can make the same profit. There's no way they can have the same loss. All right. So 1 million is 10% of 10 million naira. Okay, can you see the difference now? All right. So somebody with 10 million naira has higher advantage in the market to make more money and also to lose more money. Okay, while somebody with 1 million naira has, there's limit to what he can do in the market. Now, but let me just get this straight for you. Now, volume is your trading capital. So if you have enough trading capital, then the next question you want to ask is, okay, fine, what will be my lot size? Now, in terms of lot size is what determines your profit or loss in this market. Okay, lot size is the quantity of what you are buying or selling in the market. I can simply say that lot size is the amount of what you are buying, amount of particular currency or stocks or index that you are buying in order to determine how much in value you are going to make. Now, why I'm doing this video is just to let you know that there are a lot of things to consider before you can say you want to know how to manage your risk. Okay, so let me quickly talk about the first thing, which is the volume, which is your trading capital. Now, for somebody with 100,000, 200,000, 150,000, 70,000 in naira now, and you want to trade, there are some instruments rather that you are not expected to trade. So instrument like what? So if you have 200,000, if you have 100,000 naira in your trading account, please, I would like you to listen to me very carefully. Okay, Uncle Emeka, please be very careful with your lot size and the instrument. So let me quickly talk about the instrument you can get to trade. Now you can get to be trading currencies, currencies like what now, because under currencies there are different classifications. So in terms of currency trading, you have the major currencies, minor currencies, and you have the exotic currencies. Now, for somebody with 200,000, 150,000, 100,000, I will simply advise you to be using the major currency to trade. Hello. Now, in terms of major currency, we are talking about the likes of Euro USD, GBP USD, USD JPY, USD CAD, USD CHF, AUD USD. I used to call that instrument a useless instrument. AUD USD is pretty useless, okay? Because regardless of the lot size you are using to trade, you can, there's limit to what you can make, there's limit to what you can lose. Right, you can't lose all your capital using AUD USD to trade. AUD USD is one of the most simple and the most cheapest instrument you can get to trade in this currency market. All right. Don't forget to like this video. Don't forget to share the video, and don't forget to subscribe to my YouTube channel, because I'm going to be loading you with so much information. All right. Now, don't forget, the first thing you need in risk management is what? Your balance. Know how much you have in your trading account. Now, number two is the lot size you want to be using to trade. Okay, what is the volume of, what is the quantity of what I want to be buying and quantity of what I want to be selling? All right, because you can either buy or sell in this market. Okay, and in terms of lot size, there are different categories of lot size. Okay, the higher the lot size, the higher the money you can make, the higher the money you can lose. So don't forget, the higher the lot size, the higher the money you can make, and the higher the money you can lose. The lower the lot size, the lower the money you can make, which means the lower the profit, the lower the loss. All right? Don't forget, the higher the profit, the higher the loss. The lower the profit, the lower the loss. All right? Now, in terms of lot size, okay, so for somebody with 100,000, 200,000, now I've not gone to people that are actually trading in billions or millions of naira. Now, the reason why I've not gone there is because now, majorly we have some set of people which are the retail traders that are just using few for capital to trade. So you just want to consider them for now. So in my next video, I'm going to be talking about the investment sector, those that are trading in big volumes, that are using billions and hundreds of millions of naira to trade in the market. But for you that are using 1 million and below, this is just for you. This is for you. Now, don't forget, 1 is your trading capital. 2, your lot size. Now, number 3 factor that determines your risk management is, just guess, the instruments you want to trade. Okay. Now, instrument is one of the things that determines how much you make and how much you can lose, regardless of the lot size you are using. Now, for example, there's difference between currency, there's difference between commodities, there's difference between indices. All right. So in terms of currency, we have, just like I explained earlier, major currency, minor currency, and exotic currency. Now, major currencies are the cheapest currency you can get to trade, while minor is not cheap, exotic is more expensive to trade. Can you see now? So the currencies varies. They varies. Now, and also another thing you want to check is for the fact that you want to look at commodities. So you have currency commodities. Now, under commodities, there are 3 classifications. We have the likes of agro commodities, we have the likes of energies, we have the likes of metals. So under agro commodities, that's where we have corn, wheat, soya beans, sugar. Now, there are so many agri-produce you can get trade. But let me shock you, sir. Let me shock you out. Now, agro commodities are way expensive to trade than currency. So if you have 100,000, 200,000, I will not advise you to be trading on agro commodities. So the best thing I can advise you to trade, if you have 200,000, is to stick with currency. Just stay with currency. But if you have 1 million naira and above, now conveniently you can trade on agro commodities with a minimal lot size. Don't forget, lot size is what determines how much you make and also how much you are going to be losing in the market. All right. So number one factor in determining your risk management is your balance, which is your trading capital. Number two is the instrument you want to trade, and number three, don't forget your lot size. Your lot size. So three categories of lot size: standard, mini, micro, and they are basically four, but majorly the platform I'm using to trade, which is Rally Trade, they operate on three particular lot, which is the standard, mini, and the micro lot. So the least you can use to trade with Rally Trade is actually a mini, it's a lot rather. So you can get to use a micro lot to trade. All right. Now that's number three. Number four. Now the stop loss. Most professional traders believe that stop loss should, you put your stop loss somewhere before the resistance, support, blah 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 blah. Now, to shock you, I don't use stop loss to trade. Now, I'll do a video for you guys to explain why I don't use stop loss to trade. Okay, because can you imagine entering a trade, and after you've entered the trade, the next thing is that you set your stop loss, you set your take profit, and after you've entered, price went straight for your stop loss. After taking you out a loss, start going in your direction. Hello, they will say wishes and wizards. The most funniest response I used to hear in regards to that is they are watching me. See, nobody is watching anybody. The market is just doing what it is expected to do. All right. So, but for me, I don't trade with stop loss, right? And there's a technique to that. There's a technique to trading without stop loss. All right. So now these are basically all the things you need. Don't forget. Number one is your trading capital. Number two is the instrument you wish to trade. Number three, your lot size, and number four, which is your stop loss. As a beginner, you need to learn how to set stop loss, but by the time you grow in trading, there are times you don't need to set stop loss. All right. So we'll still be taking this risk management further. This risk management is just a brief explanation of everything you need to know in concerning your risk management in Forex trading. All right. Don't forget to like the video. Don't forget to subscribe, and don't forget to share the video. All right. So anticipate my next video on risk management. Peace out.